What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 40. It's August the 4th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about our key levels that we have today. So yesterday's closing price would be 35,307, and that's going to play a major role not only in the morning session, but also in the afternoon session. Now, today is the first Friday of the month. So we had non-farm payrolls come out, and when that news came out, we saw a huge surge to the upside, and that pretty much is what led us into the opening at 9:30. So when the market opened at 9, we see the prices continue to the upside. They spiked, created a higher low, and from that point, I boxed it up, zoned it up, and then used that as a reference point throughout the rest of the day. So then once prices finally broke out of the zone and I saw them create a higher low on top of the zone, I said, okay, I want to trade in line with the uptrend, so I waited for prices to come back and retest the support level for the higher low. And then I just simply took it back up to what used to be the previous high for the day up here at around 35,500. So then after that, we see a strong sell out to the downside. We push back into the zone. But that leads us also to trade number 2. Now right here, I went long as prices made a higher low at the zone support. So I just simply waited for the zone to hold up. I waited for prices to come back and retest it one time, and then I took it up to my scalp target. Looking back on it, I think I could have got a little bit more out of this one, because in a scenario like this, it makes sense for the market to either, if it is in a downtrend like it was after it made a lower high, it needs to come back and retest what used to be previous support but should now act as resistance. So that's a logical level to get out at, as well as the top of the zone. So I think in those situations, even though I did get my full scalp target, so I'm completely happy, it's a little bit more that could be had. And I think on those trades where I can get a little bit more without having to put in too much more effort, I should go ahead and collect those points. So overall, good job on trade number 2, but it's definitely some work I can do on my entries so I can expand my profit targets and make a little bit more on each positive trade that I have. So after trade 2, we see prices eventually, they do come back, retest resistance. From that point forward, we sold off straight through the zone, all the way back down to a previous zone of consolidation that we established in the pre-market. Now, from this point forward, you can't see it, but below this lowermost zone on the chart is yesterday's closing price. So remember, yesterday's closing price was 307. This zone was about from 355 to 370. So when I saw this strong down move coming into this zone from below, I was like, okay, more than likely momentum should carry us down to yesterday's closing price. And that was pretty much my whole idea between trades 3, 4, 5, and 6 within this entire zone. But the only thing is, you don't want to necessarily chase a level before it gets there. You might have a good idea that the market is moving there, but you still got to see all of your confirmation signals. You need to see the market push through the zone, break out of the zone successfully, retest the zone, and then continue moving. And if you don't see that, then more than likely, it doesn't mean that the market can't get down to that level that you're looking for, but it means that something else could happen in the meantime, in between time. So you want to make sure that you keep your eyes open and you don't just want to get focused on one particular thing, because multiple things can happen in the market and you got to stay prepared. So on trades 3 and 4, I was just way too excited. On trade 3, this is probably my worst trade of the day right here, because I literally shorted at the lowest prices of this entire downswing. And of course, prices came back to the zone, stopped me out. So I learned my lesson on that one, and I took the same trade once again, but I just took the trade from higher prices. Now on trade 4, I was luckily able to get out at around break even, so that's not that tough. But then I come back on trade 5 and I'm shorting from the top of the zone, which from a strategy perspective, it makes sense. But one thing that I did learn was that you got to take into consideration these wicks that are on top of the zone. Now, for me, I like to just use the zone and the zone only. And I'm like, look, it should respect those wicks and then come back. But you don't always want to just give it the benefit of the doubt that the wicks will be respected, because there will be some times where the markets just continue moving up. And if you just short the zone because it came into the zone, that's not really the best course of action. So what I learned right here is that, yeah, you might feel as though this is the greatest spot to get into the short trade, but you still want to wait for prices to come back to your level. You want to see the reaction around that level, and then you want to make your decision based on the information that you see and based on the things that happen after we see prices hit that level. So in this scenario, if I would have followed that idea, I would have been able to see the wicks come up to the top of the zone and retest this uppermost wick that we already previously made. You see I went short on this candle right here, so that means that this was already created, so I could use that as a reference point. Because if you notice where I got stopped out at right here at the blue triangle is not too far away from the top of that wick. So if I was able to put my entry anywhere between the top of this wick and the top of the zone, I would have been good and would have never gotten stopped out, and would have been able to take prices at least back down to where trades 3 and 4 originated from. And that also would have pretty much helped me avoid taking trade 6. Or if I did take trade 6, I might have actually locked in a profit, because when I took it this day, I actually wasn't able to lock it in, even though prices came all the way back down to the bottom of the zone. And that's what I talk about when I say zones are super tricky. You gotta have the perfect entries and the perfect exits, because it's so many participants in the market that are looking at this same zone that if you wait and you hesitate when it's time to enter or when it's time to exit, you'll miss that price. Because when you look back at this chart, it looks as though you had time to make decisions when the market tested the edges of this range, but that was not the case. They tested the edges of the range and then they moved away immediately. So you always want to be quick and on your toes when it comes to trading the zone, and that's very important. And that's one of the biggest lessons I took away from this entire junction right here. So after that, we see prices continue up, and now that I'm looking back on it, what's really interesting is that it actually formed a higher low, and this is one of my favorite setups now that I'm looking at it. This is a downtrend reversal with a higher low that gets established. So in these scenarios, my ideal strategy is to go long as prices come back into the support level for the higher low. So in this scenario, this was not the textbook function of what I like to see, but it was good enough to trade. So if we look at this as the swing low, we could consider this wick right here the higher low. So we usually draw a level of support across. But since the zone is already right here, we can just use that as our level of support. So every time prices came back into the zone, I actually should have been going long. And if I would have did that, I would have never gotten stopped out at all, even if I did go long at the bottom of the zone. So very interesting right there. You know, and that's why I say it's so important to keep the overall market context in mind, because I got married to prices going to that closing price from yesterday a little bit below, but you never want to get married to a level. You always want to respect the market for what it's doing. Trade what you see, not what you think. So after we created that higher low and broke out of the zone, we had a strong momentum move to the upside, all green candles, and we were able to break back into the zone one more time. So as we came back to retest the zone, I pretty much just took the same trade right here that I took from trade 2. Notice how on trade 2, I went long at the bottom of the zone, expecting support to hold. In this scenario, I did the same thing, except I went long during an uptrend. So that's a little bit better than what I did at trade 2. Even though trade 2 was successful, that was more of a scalp trade against the trend. Now this right here was a scalp trade with the trend, and now that I'm looking at it, it's very interesting because I could have potentially held it up to the top of the zone. Now remember, from trade 2, I was talking about how it was potential for me to hold it up to resistance. So I learned my lesson, and when I came back on this trade, I did take it back up to resistance, just slightly below that level. So I got the most out of it that I thought I could, but I wasn't quite sure if it was coming back to the top of the zone, because after this strong of a downtrend, I wasn't really sure if the up move wanted to continue and make new highs, or if it was just going to come back, retest this level of support, and then move away and continue the second leg of the downtrend. So I got out right there. But looking back, when you consider what was going on, not only just today, but yesterday, throughout the week, and throughout these past couple of months, the uptrend has been very strong. So I think in scenarios like these, when you have an opportunity to hold a trade that you had a good entry on, like, think about it. I went long at the bottom of the zone. That's probably the cleanest entry on the chart that I took today. So if I would have held a trade like this, who knows where it could have went. So I think it's important for me to start to expand and start to look for a little bit more profit on the trades that are really good entries. Now on some of my trades where I'm just looking to get a scalp target here and there, yeah, I'll be in and I'll be out. But on trades like this, I could definitely think about holding it. So that's something that I want to think about going forward in the future and try and incorporate into my trading strategy. So after we see prices come back, retest resistance, they pushed all the way up to the top of the zone. We have another successful breakout, kind of like we did at one. But right here, I was trying to chase the market and get my entries in, but every time I tried to put my orders in, I was about maybe 2 to 3 points away from where the market actually reversed that. And that happened on this higher low as well as this one. And I skipped this one. Now, I think that's really important because me not taking those trades right there kind of made me feel like I didn't maximize what I could have gotten out of this upswing. Because once we started this move, I'm like, okay, once we broke out of the zone and had a successful breakout, it only makes sense for us to come back and retest this way. It's not guaranteed, but based on the way that the price action is moving, that's the level that I'm going to be potentially looking out for. So once I started seeing those higher highs and higher lows moving towards that level, I should have been participating. Now, because I wasn't able to get a trade in, I felt as though I missed out, and I felt like I had to hurry up and make something happen in the market, even though it wasn't anything necessarily there at the time. And that was kind of the mindset that I had going into trade 7 and 10. And that was pretty much to my detriment because I was just forcing it, trying to get a profit, trying to compensate for what I missed over here. So on trade 7 through 10, well, 7 through 11, actually, I went long way too many times right here, and I lost discipline for a second. So if you look at it, I went long right here at 7, and it didn't work. Now, what's really interesting is that I didn't have my zone drawn like I do right now. I came back and I redid this zone when I actually did my trading notes because I realized that I drew the zone up the wrong way. When I drew this zone up, I drew the zone based off this higher low. So take this support level that we have right here down below and just in your mind, just pull it back up to this level and use that as support. So right here, I was going long based off of what I had the zone drawn to be, but I went long too many times. It's like, even if you did have your zone drawn the wrong way, there are still some things in place as far as my trading rules go that'll help prevent me from just completely losing too much money when I'm wrong, even if my levels are drawn up the wrong way. And I think after you take a loss one time, if you come back and take it again, it makes sense. Because in this scenario, I was expecting for prices to bounce off of the zone right here and then continue moving higher. So I went long again and took the same trade. Got stopped out for break even. Now that trade, that's acceptable. But for me to then come back on trades 9 and 10 and still try it again, it's just not making sense. Especially if 9 didn't work. After 7 and 8 didn't work, at some point, you really just got to let it go and say, look, I tried to trade this junction in the market, but it just wasn't working for me. So I'm going to sit back and wait for a little bit more clarity. And when I get a setup that I really like and that I really understand, then I can get back in the market. So going forward, that's the mindset I should have in scenarios like these, because it can get really tricky really quick when it comes to the market. A couple bad trades, and before you know it, you're looking at your P&L and you're saying, dang, where did all my profits go? So you got to make sure you stick to your discipline all the time. You can't even have one lapse in discipline. None at all. You got to stay strong. So then eventually, the culmination of all of these bad entries right here pretty much resulted in 11, where I looked and I saw a higher low right here, right? So we pushed down to the bottom of the zone, pushed up, pulled back, and this was our higher low. So I circled that up, and then I used that as a level of support. You know how I like to do, look to go long as prices come back into that support. And I did. I went long right here. Had an opportunity to take a very small profit at the zone at the worst, or at least get out for break even, but I let prices come all the way back down, and eventually once this wick right here happened, I got stopped out as prices came back into the zone. Now, that was definitely not a good trade by me, because this was probably more than, I think, probably about 10 to 12 more points than what my usual stop loss would be. So when you're wrong in the market, just be wrong, but don't increase your stop target, because if you are wrong, that's just going to dig a deeper hole for you, which is going to make it harder to get out from. Now, luckily, today was a trending day where the market was really moving and it was really volatile, so it was a lot of opportunity for me to make that back. But going forward in the future, I really don't want to make decisions like I did on trade 11, because what if this was a slow moving, range bound type of day? It'll be really hard and difficult to get back those profits that I lost, because it's such a bigger loss than what I'm used to. So always want to set yourself up for success, and you don't want to do too bad before your best trades come. You want to keep your losses small when you do have to take them. That's the biggest lesson to take away from trade 11. Now, when it came back to trade number 12, this right here is really not one of my particular entries that I like to use, because even though I do like long tail candle wicks, I don't think I've studied them enough to where I can just draft a concrete plan and strategy around it. But the reason that I took this trade yesterday, because let's read the notes real quick. So I went long here after seeing a long tail wick form, and this same move happened yesterday. And if we go back, let's actually take a look at it. So let's go back to August 3rd yesterday, and let's look at trade 10. So trade 10. Okay, so I went long here during the upswing as prices came back to test support. You know, when I'm in an uptrend, that's one of my favorite ways to enter. So let's go ahead and break that down, and let's see exactly what happened and how that led me to taking the trade that I did today. So came back, retested support. As we moved away, I went long. But after I closed my trade, look at this very next candle. On this very next candle, we spiked all the way down to the downside very quickly. The same way you see this long tail candle wick, imagine how quickly that formed in real life. It was very rapid and very aggressive. And then all of a sudden, what used to be a completely red candle was pretty much bought up immediately and was able to close as a small green tail, as a small body wick on the top, which is very bullish, very, very bullish, because sellers at one point in time had the ability to come in and push this market all the way back down to the zone from below. But if you notice, this long tail candle wick actually led to an uptrend that lasted for the rest of the day. Now, on this particular occasion, this went from a low of around 250 all the way back up to around 450 within the span of 2 hours. So 200 points in 2 hours. Very lucrative. So when I saw that same thing happen today, I almost hesitated a little bit and said, I don't want to take it because that's not really my trade. But it was just something that spoke to me, and it just felt completely right, because if you look at the market scenarios, we were in a strong uptrend today, just like we were yesterday. So for us to see this type of movement, it just makes sense. And I said, look, if I do get in and I go long right here, as long as I put my stop somewhere either at the zone or below the wick, I should be good. It was a little bit risky, but based on what I've been studying so far, I just felt as though I had to take that trade. So I took this trade and I held it. I'm a scalper that likes to get in and I like to get out. But on this trade, I was like, look, if it went up all the way yesterday, I'm not sure that it's guaranteed to do that today, but I think it can at least go back up to the top of the zone. So I was able to take prices all the way back up to the top of the zone, and that actually helped me recuperate all of these losses that I took between 7 and 11. But I was still in a hole a little bit from trades 3, 4, 5, and 6. So still working at a negative P&L, but I came back in the afternoon and I tried to make some of that back. So here's what I did in the afternoon session. So on trade 13, notice how, actually, let's just compare what happened in the market. So the uptrend did pretty much go for a good amount of time, but as we came into the afternoon session, we kind of started to peak out around 600. So this was 540, the high that we made in the morning. So we moved up around 60 points higher before the uptrend fizzled out. So we see this bear trend line get formed after we created a lower high. Then once you have a swing high and a lower high, you can just extend your bear trend line throughout the market and use that as a reference point to go short from as long as the downtrend continues. Now, despite that being the case and that being a strategy that you're supposed to use with a bear trend line, I still decided to go long right here on 13. Now, I need to remember that higher low setups don't work as well in down markets, because the reason I went long at 13 was because I saw what was a higher low right here. Because notice how we came back to the bottom of the zone on this red candle. We pushed up, pushed down a little bit on this red candle, and then moved away. So right there, I identified that as a higher low, circled it up, and pretty much looked to go long as prices came back to retest that level. So when they did retest that level, yeah, I caught my entry, but you got to remember to use the right types of entries and the right types of markets. When it comes to a very strong downtrending market, that higher low setup strategy is not that it can't work, but it's just it just has such a much lower level of actually being successful that you don't even want to try that type of move. If you're not going to short it, then just leave it alone. You don't really want to look to go long at all in situations like these. So I had to take that loss on 13, but I learned my lesson though. So I came back on 14 and I went short right here as prices came back to retest what used to be previous support, but is now acting as resistance. So notice how when we pushed down past the zone, into the zone, excuse me, this was the lowest swing low that we made. We pulled back, retested the top of the zone, and then we started moving back down to the downside. Now you can't really see it on this candle because this candle did so much before it closed, but this candle was actually down here before it closed, pulled back up to resistance, and that's where I entered, and then just took prices back down to the bottom of the zone. So after that, we continued down. Market sold off extremely aggressively, and then we come back to trades 15 and 16. Now this zone is very interesting because this is the same zone that we were trading a little bit earlier in the pre-market, where I was having just too much excitement about prices going back down to yesterday's closing price, which is this purple level down here. Now I ran into the same problems at 15 and 16. So let's read the notes. I shorted the zone 2 times right here. Now it's important to consider any wicks above the zone, and that's pretty much the same lesson that I was learning from last time. So let's zoom in and really take a deep look at what happened. So if we look at 15 and 16, I shorted right here, but I shorted way below where I should have actually shorted, because if you notice, it's hard to see, but we can work with it. I shorted not necessarily towards the top of the zone. My short entry was at this orange triangle. That short entry should have been somewhere at the top of this zone, because just like before in the morning session, if I would have shorted towards the tops of the wicks or at a better level from the top of the zone, my stop loss would have never been hit, and I would have been able to rack up profits throughout this zone multiple times on both of these trades. So these 2 losses could have actually been 2 gains if my entries could have been a little bit better. So that's something I definitely got to work on when it comes to the zone. I think when it comes to other entries, it's okay to kind of jump in front of the market a little bit. But when it comes to a zone, you cannot try and get a better price. You put your entries at the edges of the zone. You put your exits at the edges of the zone, and you don't move them. You let the zone play out. You don't get greedy, and you execute quickly and fast with confidence. So that's what I got to work on when it comes to zones. Just trading them the right way. It seems so simple to trade a zone, but you got to get the simple things right too. So that's what I learned on 15 and 16. Now on 17, I just got FOMO right here, because once I saw this bearish engulfing come all the way back down to break out of the zone, and then we saw follow through, I said, oh, okay, this is the move that I was looking for. We had our pullback, and now we're about to continue on to make a new low. Well, that wasn't the case. We had one more pullback left, and I think it's important to not short the lows of any downswing, because you never know when that pullback is coming. Yeah, it might be occasions where the market just continues moving down like we had before, right? Like over here, that would have been the right decision to make. But towards the lows of the swing, you really don't want to do that. And that's pretty much what I had to learn on trade 17. Now, I came back on 18, had a break even trade. Now right there, I should have stopped, but I continued to try and short one more time at 19 and had to take a loss on that one as prices came back into the zone. But once we finally got above the zone, we came back to retest these wicks one more time. We tried to break out past it, and it looked like we almost were for a quick second, but then we immediately came back into the zone, and then I caught prices on the way down at number 20. Now that's really how you should execute a scenario like this. You don't want to try and anticipate when the move is happening. You want to see the move start happening from better prices, and then you just join in and you hold the trade to your predetermined location. So I eventually was able to get this overall trade idea that I had right, but the gains that I made on 20 were just enough to recoup all of the losses that I made from 15 through 19. So yeah, my idea eventually came to fruition, but that's why it's so important to be patient and to be very meticulous when it comes to your entry, because like I was saying earlier, a couple of bad trades can throw you off and kind of mess up the profits that you can make going forward when it comes to your best trade. So you always want to cut out those lower quality setups in between your best trades. And that's something that I've been working on all week long and that I want to continue working on. And then on after 20, I pretty much called it a day because this was my best trade of the day. I was able to take it from 60 all the way back down to around 310. Yesterday's closing price was 307, so I wanted to get out just a little bit in front of that level so that the market wouldn't fake me out and then move the other way. So after that, I decided to call it. That was my best trade of the day, my best trade of the week. Made 50 points on that one. And I pretty much ended the day at break even for the most part. When you factor in commissions, I took a little bit of a smaller loss. But, I would say today overall, when it comes down to it, I feel like I'm still kind of in the middle a little bit where I'm making really good trades here and there. But my bad trades, they really need some work because those bad trades are eating into my overall profit. So I'm optimistic going forward in the future because I see the potential that I can have. Like, you look at trades 20, you look at trades 12, you look at trades 1. This trade doesn't have a number, but we can call it trade unknown. Trade number 2, what else? That's one yesterday. Trade 14. Like, I can make good trades when I analyze the market and I'm patient and I wait for my setups and I don't try and jump in front of anything or anticipate anything too early. So it comes down really to discipline. I gotta be meticulous enough and pay attention to all the small details so that I can make my best decisions count and try and avoid some of the mistakes that I've been making so far. So going into this weekend, man, I'm gonna be on the back tester heavily, just trying to understand where are the best levels to get in and just work on my patience. Work on not taking the trade when it's at the lows if I'm looking to go short, but being patient enough to wait for the market to come back to my levels. And I think before I go, I just want to read 17 and 19 one time. So right here, what I said was the market won't move without you. Be patient for the big move. And that's so important. And I think that's one of the biggest possible things that I could take away from this entire day is that I gotta be patient. The market is not gonna move without you, and if it does, you can always catch a continuation type of trade. You don't have to catch a pullback entry opportunity all the time. So that's the biggest thing that I wanted to take away, and hopefully you guys learned a lot too. I hope you learned something about trading yesterday's closing price and also being patient enough to wait for that trade to form and not just jumping into it immediately and hoping for the best. So with that being said, I hope you guys have a great weekend. I'll be back again on Monday. What is that? It's going to be August the 7th on Monday for day 41. And I'll be ready to run it up. But until that time, you guys, take it easy and have a good weekend.